Cue the fireworks. We have bad news for the first time in a long time. Well, not quite. It's not exactly what you're thinking, but we're going to go over those articles as well as what we talked about. Interest rates, we're seeing the light. We're seeing the end of the tunnel here. At least that's my prediction. All next on Real Estate Daily. Welcome, everyone. My name is Troy, and every day we go over, at least Monday through Friday, real estate, housing, and the mortgage markets. All right, so today, before we jump into it, do me a favor. If you're a buyer and you're on the sidelines, we have something free for you. We have a buyer's guide. Go ahead, go to the link down below, press it, put in your email address, and let's rock and roll. All right, jump into it. This is the negative news I'm going to go over with you guys. It is not residential real estate. It is commercial real estate, office buildings. Guys, if you hear me, I joke around a lot, and then I don't joke around a lot about zombie cities. The first zombie city is in San Francisco. The second one in the United States will be Los Angeles. Some of you have already said, hey, Troy, there are already zombie cities where a lot of the commercial property, they're not making any payments on. And some of those owners are just defaulting all over the place on their loans and or handing back the paper to the lender. And so with that being said, we have not seen any of these numbers on the books. So what's happening, and today is going to be a perfect example, and going into next week, banks are now giving earnings out, the second quarter earnings. And those earnings, they don't have to write down those losses, right? They're just saying, oh, they're notes. And whether they're performing or non-performing, they don't have to do it. So with that being said, we are seeing less and less of these cities, in these office spaces that are actually being utilized. And sooner or later, as companies just they have to do something with it, whether they're going to lease it out for significantly less, or they're just going to hold it on their balance sheet, which sooner or later will put them out of business, or at least strain their business, or simply hand the paper back, but they still owe it, right? This is going to cause a lot of companies to have bigger problems. And of course, commercial real estate is going to dive. We also know that a lot of this, and I know that this article right here from CNN News, which I don't believe anything CNN actually says working from home could wipe the $800 billion from office values globally. I think we're in the trillions. We're not even billions. We're in the trillions. But I don't think it's the work from home issue. I think it's the poorly ran cities that are now running people out. We know that let's say the bird flu, or the beer flu. Once that happened, people stayed at home and they started working from home. But a lot of companies demanded people to come back to work because they were not as productive staying at home as they were actually rolling into an office. So there's been some give and take, but a lot of companies have asked people to come back. Well, if you go back, and those downtowns have had all kinds of issues, meaning the homeless populations are just growing and growing. Crime is rapid because we went through defund the police, and there's a lot less police. And then all the social causes that are out there that have not helped the cities whatsoever. Well, then people have no problem just trashing downtown, and that's where nobody wants to work, and companies want to vacate. The government is not doing their job. We can go over many other reasons why, but this is why we're seeing commercial real estate is teetering heavily. And those losses on some of these books are going to be enormous, but until they actually show those losses, you're going to see these little bitty healthy bumps in second quarter earnings that you're going to say, well, it's why are we showing this? Why with everything that's, credit card debt at all-time high, office buildings that are completely vacant, cities that are just entrenched with homeless, fires that are burning, insurance companies going, through the roof, prices, inflation going up. Why is everybody happy? No one's happy. That's all you get is kind of a slanted view. And of course, I think we're going to get a slanted view until we have elections, which is about 15 months away. And that's going to ramp up heavily in the next 90 days. There are people going to hit the road shows. We're going to have debates out there. we're probably going to have more cocaine show up at the White House. We already know that now it's not just one time it happened. There's 3 times there's drug incidents at the West Wing of the White House or at the White House. So we know that's going to happen, right? Because you got to keep Joey awake, right? All right, guys, let's jump to the next one. It's the same thing. Relics of last commercial property crash wobble again. This is not even close. Commercial real estate is on such a bigger rope than it was 15 years ago, because back then we get it, it was a housing bubble that caused the recession. This time it's the government that caused it by over quantitative easing, and of course, the spending just out of control, $8 trillion. So that's the reason why. Not, again, it's going to be so much worse, and this is going to be way more highlighted in the next 6 months about commercial real estate. All right, so let's jump into it. This is Orange County Register real estate news. Investors gobble up fourplex apartment properties. They see that rents are going up. When I keep seeing all these things out there saying, oh, rents are going down, rents are going down. Rents are not going down, guys. If they're going down, it's because they're in horrible areas that nobody wants to rent in, that, either the school system is atrociously bad, or crime is up through the roof, or it's just a really bad area. That's the places that rents are going down. In Orange County, rents are not going down, they're going up. And that's why investors will overpay for properties, because they know that in the future, people are going to migrate out of Los Angeles. They're doing it now. People are leaving Los Angeles. The home values in some certain areas are going down because it's just atrociously bad, right? That's why you're starting to see this happen. And Orange County Register is highlighting it today. All right. This is home prices rise for the first time in 5 months. Well, when we keep seeing these articles, we're seeing different analytics from different places. I usually find my analytics from NAR, National Association of Realtors. They have a grip of what's going on with the MLSs. Then you run into other places like this. This is from Redfin. Redfin can pull information out of the MLSs, but they don't have information inside the MLSs. And what's inside the MLSs is way more valuable. Meaning, as a real estate agent, if I wanted to list a property and I didn't want it to go on Redfin or even show on Redfin, well, I could absolutely stop that from happening. I can slow the marketing down. If I already have a buyer, I don't need to market on Zillow or Redfin. So that data never gets to Redfin or to Zillow or to Realtor.com. It doesn't. So they're having limited data. And with that limited data, they have something different than what NAR is saying. So Redfin's saying the median home sales increased 1.5% during the 4 weeks prior, right? Well, yes. Well, NAR is saying they've increased over and over now for several months. They're saying the first time in 5 months. This is what's confusing out there to a lot of media outlets, and they'll take this and go, oh my God, it sucked forever. Here it is. The report also found the average weekly mortgage rate is the highest level since November 2022, bringing back the typical monthly payment of $26.27, a near record high. That's funny. The Cobesi letter last week said the average payment in California is $4,600. Almost all my clients are near $4,600. No one's near $26.27. I don't even know where they're getting this number from. If it's a nationwide number, okay, but doesn't really say it on here. It's very cloudy information that's coming out out here with Redfin. And that's why, if anyone out there who owns a home, go on Redfin and then go on Realtor.com and then go on Zillow and look up your value of your property. Those numbers are significantly different on the most part, because their algorithms and their analytics are just not good. And that's why Redfin got out of the home flipping business, earlier this year, and then Zillow got out of it last year. Why? Because all their analytics are not accurate. I just closed about 2.5 months ago a home that Redfin listed. Actually, Redfin bought, fixed it up, held it for a year, went in and out of escrow twice because it was so beat up and it wasn't in good condition. So what the company that they had, brought in was just slapped, put lipstick on the pig. Basically, that's what it did. And so when it was all said and done, what I could tell what they bought it for, what they showed me the receipts for my client, $1.4 million home. My client paid 1.36, I think, for it. With all said and done, we know that they lost at least $150,000 on that property alone that we saw. That's not counting holding costs. If they bought it cash, great. But if they borrowed the money, that loss just got amplified everywhere. Bad decision after bad decision with Redfin. That's why it's hard for me to swallow these numbers at anything that Redfin has to say. All right, good news. Great news, actually, is interest rates. You saw, thank you, Lord. We're looking at 30-year conforming, which is conventional, went down 11 basis points, 6.7. Excellent. 15-year conforming went down 12 basis points. Jumbo's under 7. Great. That's awesome. First time in a little while here, for a week or two. And then we saw FHA go down 6 basis points to under 6.7. That was my kind of goal. I was hoping that this would bring it down from the brink of 7 down to 6.69. And that's awesome. If we can continue this trend today and somewhere both conforming and FHA get under 6.6, guys, this was a blip this was just a blip that's in the radar that came about because people were scared about what the Fed was going to say. Very volatile week this week. Not sure what's going on, but it's been a very good week, though, for mortgage rates. We've seen them drop almost a quarter to a half a point. Well, guys, thank you very much for joining me today. It is a Friday. It is hot, and it is scalding hot outside. It's supposed to be right around 100 degrees and in a lot of the areas in Southern California, not excluding the beach areas, of course. And so you guys be safe, take care. And if you're out there looking for a home, there's not many out there available. So keep that in mind when you are absolutely writing offers. You guys take care. I will see you Monday.